Welcome back to Best Product for You. Today we're looking at BTC once again, which has actually put a very nice recovery to the upside since it's held the 58k support, and that was one major support that we talked about in our last video. The reason behind this move, of course, is that there is a return of institutional capital after a rough strike of outflows that drove prices below that 60 level earlier this month. The tide might be officially turning. We still don't know. As long as we remain below the 70k, which is at the 50 Fibo retracement on the longer term, this is actually the make it or break it level for sentiment. As long as we're below that level, we still are macro bearish. Okay, that's of course what we have to take into account. So there is of course a good positive inflow into spot Bitcoin ETFs over the past few days. With BlackRock IB ETF also alone pulling up about 75% of that capital. So institutions are buying the dip, and this fresh liquidity is overriding the previous bearish sentiment until, of course, we see a different play. Starting with the daily chart, of course, the it looks like the 38.8 Fibonacci that we talked about last time, which is exactly at the previous peak on the 15th of June, seems to be the level that prices are currently heading towards. Okay, 67, 67 and a half, whatever that might be. And that might be exactly where we might get initial resistance. The big question is, do we get rejected from that the potential double top, or do we break out toward the 50 Fibonacci in the first instant? Well, the Bollinger Bands on the daily chart look tilting to the upside a little bit, but quite flat. And we don't really see a characteristic squeeze that typically precedes a massive macro breakout, right? But the daily RSI is also around the 61, 62 level, and that shows that there is room still to run to to touch overbought territory at 70. Okay, so there is room, absolutely there is room for further upside if bulls want to push it. We do have this struggle, however. Okay, that is a very strong barrier, 67k, 68k, and let's not forget that this signal played out. We have had identified last time around a multi-time frame divergence on the daily, on the 4 hour, perhaps even on the 1 hour. So obviously we are going to go lower on the 4 hour to see exactly what this chart is telling us. On the 4 hour, we do see that things are a bit more cautious, right? We are seeing potential exhaustion peak forming at because RSI is really at 70. But given how close we are to these major resistance, okay, at 67, 30, 40, we could see a short-term a spike to the upside where this can be initially retested and potentially rejected. So we could eventually go a little bit higher in terms of how overbought we are, because it's not really guaranteed that the moment we get to 70 we start falling, right? So if we do see resistance here, how low could we go though? We have a very strong structural support. Well, actually, yeah, one is down at, I would say 64, 70, 65k. Okay. And we do, of course, have to take into consideration the previous peak at 60, 65, 57. Now, importantly, though, why this 65 is 64 is more important, because this is exactly what the 4 hour median Bollinger Band is sitting. We do see, of course, an upside over here, right? But if you see the 4 hour over here, the second, the third, okay, they are losing momentum. They are not as strong, okay? So we could, of course, see that extension take place, but it's likely that we're going to see some sort of reaction there. Now, since we are on the 4 hour and we see an impulsive move all the way up to 64.60 or so, and a correction down to 61.80, look, again, the 61.8 is exactly where prices are actually fighting to cross above now. We closed above, and the next resistance again at 67.30, the 78.6 Fibonacci is exactly telling us the same It's singing the same song, let's say. So 78 points is 67,300. This is our very important level. But obviously, we're not going to sit and look at the daily and 4 hour without looking at the 1 hour. But before we do look at that, I want to remind you something. I want to remind you that in our last video, we actually talked about this high momentum 1 hour candle. And we said until we actually flip that level, we are expected to be bearish. So look, we did another flash to the downside here. Then we retested that level, that 1 hour high momentum candle, fell back, then broke above it, flip it to support. And since then, we have remained above that level. So what does this mean? We have, of course, the 64.70. We have the support at 63.70. And very importantly, 61K, let's say 61 and 10, 6100. As long as we are above that level, it's unlikely that we're going to change the course. But anyway, the 1 hour, we are seeing actually a setup playing out that we mapped up in our last video, right? We did talk about potentially going all the way up to the daily Bollinger Band, which was close to the 67K. And this is exactly what's happening. We just see it in the shorter time frame. So as long as price holds above, initially I would say 64.75, okay, because this is of course the 4 hour median trend line, but it is what it is. Then, and I would even say perhaps the 1 hour lower band at 64.36. Then the bias, the broader bias remains bullish. But while the 1 hour RSI is also showing some sort of divergence here, okay, we need to be very cautious in terms of further slowing down. So I would expect a push towards that magnetic 67.30 anyway, and watch closer to see if we break out or reject. So based on that, trade safe and follow the institutional flow.